Welcome back to Stuff About Money. I'm Xavier Angel, certified financial planner, and I am joined as always by my co-host, Erik Garcia, certified financial planner. What's up, Erik? How are you
What's
today?
happening, Xavier? How are you, man? I'm good. I'm good.
I am doing good. So we've got an interesting topic on tap today.
Well, this is our topic, man. This is all fine. This show is about financial literacy, in different areas of finance, whether it's for business owners or for individuals. But I'm excited about this show because this is kind of like the heart of, I think it's the heart of what drove us to do this podcast.
Yeah,
So
I remember that question. We had a question about this. Well, several questions. People ask us about finances and educating children on a
yeah.
regular basis.
Well, the kids, teaching our kids, not necessarily children, our kids. And in fact, today we have a guest today, Javier Sanchez, not to be confused with Xavier. This is Javier Sanchez. So Javier, welcome to the show, my friend. How are you?
Good morning. Thank you for having me. I'm well. How are you all today?
Man, I'm doing good. So we met, interestingly enough, almost a year ago. And I know that because you and I just received the email to do it again, but we met because we presented at the ACE program for here in Algiers, teaching high school kids really about financial literacy. And you and I, there were I think three of us who presented that morning. That's how we first met. And you were talking about financial literacy, and I was talking a little bit more of like a mindset of how they should approach money, how these high school students should approach money as they begin their careers. And you were talking more about like I would say the more practical stuff about money. You are with a local bank here. You do teach financial literacy to kids, high school kids and younger, all across South Louisiana, I believe, for the bank. So you know a little thing or two here about financial literacy and teaching kids about money. We, as Xavier mentioned, we get this question regularly from our clients. Hey, I want to teach my kids about money. What are some good resources? What should I be teaching them? And what always shocks me, it's not shocking, is I find this kind of contrary, not contrary, but so I'm being asked by people who want to teach their kids about money, but yet they're struggling with some of the basics of money. So as we're talking about this, about teaching kids with money, I always find it good for me when I go back to the basics and I relearn the basics. It helps me grow in my understanding of something more complicated. And money sometimes can be complicated, but I think we're going to talk about some basics here. And specifically, we're going to talk about this idea of digital money. How in the world do we teach kids to manage money when it's not physical anymore? It is digital. It's a fairly new environment. We were just talking. Xavier was sharing a story here about piggy banks when we were coming up in the business.
And yeah, coming up in a business, we used to, the insurance company would give us these piggy banks, and they were these cardboard boxes. They were sliced into three pieces, and one was the spending section, one was the savings section, and then one was a section for investing. And we used to give those out on a regular basis. I still work with my kids on here are some things that you need to do when saving. Now, you said you had one that actually had four sections,
Yeah.
correct?
Yeah,
And
well,
what
I
was the
I,
fourth
I
section
bought
on it?
one with four sections for my
You
kid,
bought
and
it.
it was
Okay.
it was give, save, spend, and invest. It had a fourth called invest. So we're gonna ask, we're gonna have Javier answer the question: is the piggy bank dead? But before we hop into that, Javier, we have to ask you, especially as someone
Okay.
who teaches financial literacy, what's one thing about money you know today that you wish you would have been taught in school?
That it's always save a little bit of money.
Always say, yeah.
Yep. Save. Start saving earlier.
Yeah.
That is that.
So,
Was there a
so
particular was there a particular was there a particular event that happened that you're like, gosh, I wish I would have saved more?
Well, I'm from the St. Bernard Parish, and we had Hurricane Katrina blow
Mm.
through our home. So for me, it's no matter how much we had saved, it didn't seem to be enough to really, really right that boat. It took us quite a number of years. We had in my personal experience, we had started laying the groundwork for an early retirement. So we had all our nest eggs in property, and here comes a hurricane, and here comes your property not worth anything, and we couldn't move back. So it was demolished, and we paid on a slab for over a year until we finally got ourselves out of that. So, even though we saved and I'm a saver, we we struggled at that. So, but that's that. Yeah, that's over and done with. So a lot has changed since then.
Yeah. It's so a quick follow-up question to that. If you had to go back, is there a dollar amount that you would like to save? Because we get questions all the time on how much should I be saving? Or a
Well,
percentage. Is there a percentage that you would like to save if you could go back?
well, if I could go back, we were hovering at about 300,000 in savings and liquidity. I would probably bump that up by 500,000, almost a million, just under a million, I think at the time.
Mhm.
That would have enabled us to really comfortably trans transplant us from where we were to where we needed to be without the losing that 10 years of savings and retirement and starting back over. So that would be, going back, that's what I would tell myself. Hey, make sure you're saving a lot more than what you are.
Mm.
Yeah.
Mhm.
The obstacle,
That's hindsight, and hindsight's 2020.
yeah,
Right.
Yep.
the obstacle to saving is our own desire to have now.
Yep.
That's hard to overcome. It is very
Absolutely.
difficult to overcome.
Yep.
So, is the piggy bank dead? The piggy bank has been such a useful tool to teach kids about physical money. There's this interesting stat that I came across in the US. This was from in 2016. In the US, cash payments accounted for 31% of all payments. In
Hmm.
2022, is only 18% of cash payments. You go into places today and it's cash only. You go to festivals in, you're from Old Gretna. You go to
Yep.
Old Gretna Fest, credit card only. Jazz Fest, credit card only. Um, cash is seemingly pretty much dead. And we're in this new world of digital money, and we have to teach kids about it.
Right.
How do we do that?
Well, to answer your question, is the piggy bank dead? Absolutely not. Younger children need a container or a vessel that's clear, actually, so you can see that money growing. That instills that, hey, it's got to grow. This stage is my growing stage. It's like feeding it and seeding it. So the piggy bank is not dead. It should not be our traditional. Growing up, we had a pig that was not see-through, so make sure it's a clear vessel. And nowadays, through the American Bankers Association, you can get a little band that has needs and wants so that they can
Mm-hmm.
see what it's doing for them. And then when they get to that age where you can open an account for them, they can take that vessel or container with them and make their first deposit with that. So they see that direct result of my saving will get me this, which will get me this, right? So it's not debt.
So as a kid, I remember my dad had a 5-gallon Kentwood water jug. Kentwood,
Yep.
that was one of the local water companies here for
Yeah.
for our listeners, not from around here. And he would put all his coins in there at the end of the day. And I remember whenever we would take a trip or we had a summer vacation every year, he would take that jug to the bank and convert it to dollars. Right now, that was our spending money. We'd split it three ways, me, my brother, my sister, three ways to spend it. So in my mind, I could see kind of our the spending money that we would have for our trips. And I had a
Yeah.
little piggy bank growing up too. I said growing up, I had it all the way through college. In fact, this is a funny story. I put the down payment on my wife's engagement ring with change from my piggy bank. I had like
That's
six
awesome.
hundred and something dollars in change in my piggy bank, and that's what I used to put the down payment on her engagement ring. So, um,
Love it. That's odd. I love
but
that.
but there is a difference, right? When there's something physical, we can attach something physical to what we're buying. I remember I would go work at the coffee shop from time to time just to get out of the office, a different environment. And if I was paying cash, I would walk out of there with just a large cup of plain coffee, $2. If I was swiping my American Express card, I'd get a latte and a muffin. I'd swipe it. I would not feel the separation from my money until I had to pay that credit card bill 30 days later. So there is something powerful about using cash, about moderating our spending habits. But with digital money, we're really not, I mean, we never touch and feel our money. So how how do we teach kids to manage digital money? Where would you start?
Well, starting them earlier than later is the way to go. Talking to them about money, talking to them about what things cost. I'm Hispanic, and in my culture, we're not taught about money. We don't talk about money. We don't talk about a lot of things, but certainly not money, finances, how bills paid, all of that. So speaking to your children earlier than later is always better. Don't not granular, but just say, this month we have to pay this, so we can't do this. Make sure that it's this because of that. Starting early with an account is best. Get them, kids are so much more digital savvy now than ever before. So get them on the mobile app and see where that's going. If they have an ATM or a debit card that they're using, show them, hey, you went to GameStop, you went to Roblox, you went to the coffee store, you went to McDonald's, and this is all coming down. It's subtract, subtract, subtract. So when they see it that way, that's the old way of, hey, I have a 10, now I have $2. So we just have to rethink how we present the material to them because they're getting it. They understand it. They understand it more than we ever did because they're surrounded by it. So start them early, get them part of the system and process, and show them how to use that app to make it make sense for them.
So you're
And so
talking about,
you mentioned the apps, getting these apps for kids, and by utilizing these apps like Acorn, that introduces them also to savings, and helps them to begin to put goals in place to where they can track that from a digital standpoint as well. Correct?
Correct.
so you're talking about, so one of the real practical aspects here is get them involved in mobile banking. And most banks have custodial accounts where you as the parent get notified when your kids spend money. They can have their own access to just their account. They can track their saving, they can track their spending.
Yep.
But you're talking about almost having some type of rhythm to where you're prompting them to
Mhm.
check their balances so they can actually see, hey, you had 100 and now you have 76. What did you spend $24 on? It's not judgment. It's just they can start to connect
Correct.
spending with what they have in the bank.
Right. And as adults, we need to do that as well, right? Check your account. When I'm teaching my students, whatever age they are, make sure you're on your app at least 3 times a week so you know what's going on. You can spearhead fraud very quickly. You know what your
Mm.
trends are. We're all creatures of habit. So our sphere of what we do is very, very small. So if something's outside of that, usually the bank will call you and say, hey, is this you? But you're gonna learn your patterns pretty quickly just by doing that 3 times a week.
Yeah, and on that note, what I try to do, or what I've learned, is you want to be really careful to judge your kids' spending, regardless of how old they are, right? This is when they're under your roof. It's almost like a low stakes way to learn how to deal with money. It's like riding a bike, right?
Yep.
You can't give someone $100 and expect them to automatically spend wisely. They got to learn it. You can't give someone a bike or throw them in a pool, expect them to learn how to swim, expect them to learn how to ride a bike without some training, right? There's some training wheels. So this is a low stakes way
Mhm.
to teach them how to spend. And what I try to do is when, even today, when my kids spend money on something, if I think it's foolish, I try not to cast judgment. I'll ask the question, how do you feel about that? Do you feel that was a good use of your money? We had what was it? We bought something. We bought, this was on Christmas Eve or before Christmas Eve. My daughter and we were out and about, and I was like, I want to get something for the family. So on Christmas Day, it's not just opening presents and then everyone goes their own way. I want something to where we can all do something together. So I bought this portable pickleball net and some pickleball paddles, right? I was like, this would be fun. We can set up a pickleball court in the street. It was $100. And she was like, oh, Dad, do you want to spend $100 on it? That's a lot of money. And I said, let's think about it. We can go to like an event or something, and it's $30 a ticket. So at the end of the day, it's really not that expensive. This is something we can all do together. It's an experience. She goes, but I feel bad, Dad, because I really want it, but she felt bad about it. So I kept talking about the value that it was going to bring to us. And sure enough, man, we had the entire neighborhood playing pickleball for over the 2 week break. It was a blast. And I asked her, I said, do you think it was worth $100? And she's like, "Oh yeah, totally." So I think
Yeah.
it's important to teach kids also about their spending, no matter how old they are. We should do this for ourselves. And I'll
Yes.
spend money. I'm like, man, I shouldn't have spent money on that. Why? Why do I feel that way? Like question, like I shouldn't do that again.
Well, that's opportunity cost, right?
Yeah.
That's what kids learning in school. That's how their choice is. So if you put it that way, they immediately get it because they talk about that at school, where we didn't talk about that at school.
Mm.
We were making a good or a bad choice. Now it's the opportunity cost. The pickleball was way more important than anything else at the end of the day. I love it. We do bop it, so I get doing something on Christmas Day. That's an
Yeah, but
activity.
I think that the really practical takeaway here is as adults, maybe we're not a parent, maybe we're a grandparent, or maybe we have influence in kids' lives, is prompting kids to look at their bank account because it is very easy to lose track of how much money you have in an account as opposed to like when you had to carry dollars in your wallet, like you physically could see it, right? There was this close attachment. So mobile banking, prompt your kids. What's something else that we can do to be teaching our kids about how to use digital money?
Well, for me, it's making sure that they're very aware of what's coming in and what's going out. So if we're talking about
Okay.
young adults, they may or may not have an allowance or they may or may not have a job at this point. They need to know what's coming in. You need to be aware of the money coming in and what you have and where you are. That's my biggest sort of aha moment is when I'm teaching kids and they have no clue of anything, much less some of them are working and they have no clue about how much money I'm getting, much less what am I doing with it. So having that really good sense of what you have or what's coming in, that's going to go a long way, right?
Mhm.
Does that make
And
sense?
yes, absolutely. And one of the other pieces that I teach, at least my two older children, is setting up those alerts within those apps, right? What's your low balance? When does unusual activity may come through? Also, avoid those overdrafts. When you get that alert that comes through on that low balance, that's a sign that you need to go in there and check it. Make sure you're not overspending and get those overdraft charges because those can be expensive and they can add up.
I just want to point out here, Xavier, that your two oldest are not children anymore. But
Well,
but but listen,
but when I'm talking about my two older children, these are things that we started teaching them when they were back in high school.
yeah.
So I'm using them as the examples because even my 13-year-old, these are things that we now have with my 13-year-old.
But let's go back to this idea of awareness of income. I think that's so key. I talk to a lot of big people, adults, since we're talking about little people and big people here, who, when I ask how much money do you make, they can't get within 10% of how much money they make. And I think that's problematic. And I think being aware, you used awareness. Um, like in financial planning, when we meet with people, we talk about becoming spending aware. And part
Mhm.
of the spending calculation is income. You can't spend money if you don't have income. I guess you can. We call that borrowing. We call that debt.
Right.
But not just becoming aware of how much money is coming in, but being aware of how you earn that money, right? This idea of labor, right? I'm exchanging income. I'm exchanging something that I have, right? A talent, a skill, something, knowledge for money, right? So I think that's important that kids learn how to earn money, that they start to begin to realize like, wait a minute, I can buy my friends gifts for Christmas if I go out and work, right? That sounds obvious, but I think there's a connection. I could spend money on the new Air Jordan drops if I'm out earning money. I think that's key. So we talked about mobile banking and just prompting them to keep up with their balances. We talked about this idea of employment and learning how to earn money. I want to talk about one that I think is really important, especially kids if they're not prepared for. This is a pitfall, and I see it with adults when we look at their balance sheet is credit card usage. I mean, these kids are going to go to school and they're going to be offered really cool gifts if they just use credit cards. And it's very wonderful because we talked about earlier this idea of spending. There's a cost. I mean, there's a cost to saving. The cost is you can't get something that you want today, but credit cards make it so easy to get them. So talk to us a little bit about how do we teach kids to limit credit card use?
Well, first of all, when they're in college and they're starting to get all these offers, I've hoped there's been a conversation about what a credit card is and how it works. A lot of kids that I'm dealing with have no concept of what that means. That buy now, right now, it's that whole buy now, pay later. That's kind of a credit card, but it's that same cyclical. If you're not used to something coming in monthly and that you've got to pay for this, what does that mean? I don't understand this. What does that mean? What is the whole concept of paying for something, but I don't get a bill till 30 days? A lot of that's where there's so much mystery surrounding it from a young person's perspective. And it's only because we haven't taught them that, hey, a credit card does this. Your debit card comes out pretty much right away, right? Your credit card comes out later and then you pay for it later. There's that whole concept of buying it now and then paying for it later that kids do not understand. And especially going into college with everything else, I remember acutely like, wait, what? I have to pay for this? When do I have to pay for it? That doesn't make sense to me. And then you kind of, it falls off the side, it falls off the radar only because it's not happening in real time. And now more than ever, our kids are dealing in real time all the time. So a credit card is super foreign
Mm,
because of the concept itself,
yeah.
right? And then we're going to get into the, hey, you're paying interest, you're going to have late fees, you're going to have all that. But the whole concept, we have to start it off earlier than later, preferably before they get into college. Like, hey, okay, so we're going to do a little credit card with you. You're going to be a signer on my account and you pay for it. You're going to see it. And when the bill comes in, you're going to pay for it. And you start getting them accustomed to that 30-day lag, 38, 28-day lag time, whatever, right? So they
Mm.
understand the concept itself.
I had a client once, and this was years and years and years ago. She had about it was a consumer card. I think it might have been like Best Buy or Circuit City, one of those. Remember Circuit City? Um, one of those, and she had like a $2,500 balance, and we're kind of going through it, and I was like, okay, what's this card? We're kind of. She's like, oh, on that card, I was gonna launch a little side business, so I bought a camera, I bought some TVs, everything was on sale, it was a really good price, so I really saved money. And I said, when did you do all that? She's like, 3 years ago. And I'm like, well, let me put it in perspective for you. Let me tell you how much you really paid for it. And I did a quick calculation on all the interest that she was paying. I think it was like a 25% interest rate. And when
Yeah.
I told her, when I displayed to her the real cost that she would not only pay, but is still paying because she was carrying the balance, like her jaw dropped. She didn't connect it to, and this was a probably
Yeah.
30, 40-year old individual.
Mhm.
Um, but man, this is so important to connect when we talk about credit cards or borrowing, the cost of borrowing, and put it in perspective. I think in 2019, I was reading the average credit card for this is for might have been college student. The average credit card balance was about 1,400 or so. It's 2019, probably a little bit higher now.
I would think so.
Um,
Hmm.
but if you're paying 20%, and this is your balance, right? So we're not paying principal. We're just maintaining steady at 1,400. Let's do 1,500 to make the math just a little straighter. $1,500 credit card. If you have a 20% interest rate, you're paying $300 a year in interest just to
Mhm.
have that. And if you think about that perpetually, $300 every year ongoing. This is on a $1,500 balance. So imagine you got a $5,000 balance. That's 1,000 a year. Man, what could you be doing with that $1,000 if you had it in your pocket? And you
Right.
start to associate the cost of borrowing if you don't pay your credit card. But I do think that Um, I do think though with credit cards, there's this myth, even with adults, that hey, I pay my credit card off monthly, so it's not a problem. I don't pay interest, I don't pay fees. However, I have noticed personally, in my example that I shared, that if you do not have some limit on what you're going to spend, it's just easier, even if you pay it off every month, you will spend more on your credit card. I think I saw some stat years ago. It's like 10%. You'll spend 10% more. I'm totally making that stat up, but it's something along those lines. You will pay a material increase, you will spend a material amount more than you would if you didn't use your credit card, if you were more spending or if you had some more limits on how you spend. Have you seen that and noticed that to be true?
Mhm. I do.
Yeah. So that's a hard one. That's a really hard one to teach kids. The only thing I could possibly think of is to, and I hate to say this because adults don't like to do this, much less kids, is to have the conversation about budget with kids. How do you find that conversation lands with high schoolers?
Well, you have to, when it's with high schoolers, what I tell them, and it's a direct correlation because there's data to support this, that whatever their GPA in high school is will directly be their credit score. So if it's a student that's struggling with grades just because they're lazy or whatever, they will struggle as an adult. If it's a student
Mm.
that is on time, all the projects go in, everything gets done the way it's supposed to be due, that's going to be your 800 plus credit score person. It's just the way it is. That person is going to be more likely to take the information and do what they need to with it, where the other person with the lower GPA, they've never displayed those attributes in school. So as an adult, it's going to be the same thing. They are the ones going to struggle the most because they don't want to understand the concept of money, spending, saving. Make sense?
Yeah, that's interesting. I'm thinking about that stat, that correlation between
Yep. There's
between
data.
I guess
I don't have it with me. I did it. I researched it last summer, and I'll bring some stats so you can post them all along. But yeah,
so
kids understand GPA, right?
so
They
yeah, so
use
in
GPA
general,
all
your
day, every
credit
day.
score is it's a grade of your
Donut.
credit worthiness, whether you like how
Yep.
they calculate it or not. That's what
Yeah.
banks and lending institutions use to determine
Yep.
whether you're worthy to loan money to or how much they're going to charge you for interest to borrow. So there's a level of financial responsibility. You tend to find people who have higher credit scores tend to be more fiscally responsible,
Yep.
and then with grades, GPAs, in general, the kids that are working harder are making better grades. Obviously, that there's outliers, so I don't want to
Yep.
blanket
No,
say that.
of course.
Um,
But
and, and and some people get into debt. They have
for
bad
other
credit
reasons,
scores
right?
for
As
things
individuals.
outside of their control. I just want to make
Of
that
course.
that
Of course.
statement
But it
here. But that's
just,
interesting.
yeah.
So,
Yeah.
is it
It is
enough?
interesting, but
Is it enough to say that if you're raising responsible, disciplined, self-controlled children, then they're going to be responsible, disciplined, and self-controlled with money and do good with money?
there's always that offshoot that they're not, but typically they will because they're going to follow your habits. So if you have good money habits, they're going to follow those because they've heard you, they've seen your actions, right? And
Mm,
they've seen how you handle money or you don't. And with credit score too, people think that if you have a lot of money, you're going to have a high credit score. That's really not the case. You can make very little bit of money and still have an 850 credit score. It's just being smart and wise with your choices. So as with children's and teens especially, if they see you being responsible and every once in a while, and this is the real world. This isn't our pregame to our real life. This is our real life. So I expect everybody to at one point get a little crazy and spend a little bit more than they normally would just because it's life and we live. But if you're responsible, your kids follow that path. If you're very irresponsible or you always seem to be struggling with your money, 9 times out of 10, unless your kid sees it and says, I don't want to live like this, they'll fall into that same habit because that's what they learned and that's what they see to be the truth. Right? Does that make
mm.
sense?
It
So
does.
what I'm hearing you say, this is a hard one. This hits hard. You might be stepping on some toes here.
Yikes.
We might lose listeners here. But
Uh-oh.
what you're saying is your kids are more likely going to follow what you do with money rather than what you tell them to do with their money.
Absolutely. Kids want example, right? They want to see that example. Don't tell me, show me, right?
Interesting.
Kids
Yeah.
nowadays are way different, y'all. It's totally different. They're exposed to a whole lot more at our earlier age. They come in, they want to see the receipts, right? As I say,
Hmm.
they want to, what are the receipts? So show them the receipts. We're living well. We don't seem to be struggling that much, but every once in a while we can't do it because of XYZ. Property taxes come in January, you know that. Christmas comes in December, you know that, right?
Mm-hmm.
So I tell all my kids, if you think of everything, look at the calendar, everything is pretty much set for you. You follow suit, and then you'll have everything that you need when you need it if you're doing things
This,
thinking about
this sounds a lot like a backdoor budget,
it.
right? This sounds like a really good way to talk about budgeting
Yes,
without saying the word
correct.
budgeting,
Yep,
right? Yeah, you bring up a really interesting point about showing kids receipts. And one thing I found myself doing was telling my kids, we don't have money for that. We don't have money for that. We can't afford that. And I'm like, you know what? That's a lie. We can buy that if we wanted to. So what I started telling my kids is, hey, you know, we could get that, but we decided to do something more important with our money. We would rather do this with our money. This is why we would rather do this with our money. We're saving for this trip or for a pickleball court, right? Like, I guess that goes back to opportunity cost. Is yeah,
yep,
I have options, I have different opportunities. What's the cost associated with choosing this one versus that one? So I
absolutely.
think it's really important to bring kids into those discussions.
Which is all what it's all about conversation, right?
Yeah.
And communication. It's all about communication. Everything really is about communication. They don't tell you that growing up, but it really is.
So I think one, and maybe we'll wrap up on this one. I think something that's really also important to teach kids early on is that even when we put our mind to something, we have willpower. I'm gonna will my way to get this done. Sometimes as humans, our emotions get the best of us, and our willpower can only last so long. And we
Right.
need some form of accountability. Certainly, you as a parent can hold a kid accountable to doing some of the things that we're talking about. But I think kids understand as much as we do this idea of using technology to automate certain things. You talked about wanting to have saved more. Man, how great would it have been if you'd have said, you know what, I'm going to automate that saving, so I don't even have to think about it. I don't have to rely on my willpower. I'm going to use the power of technology to keep me accountable. So looking for opportunities and talking to your kids about opportunities, how can they automate some of these things with their finances?
Well, that's with the app, right?
Sure, app. Uh-huh.
With the app. It's just get them started early, get them with an institution that you trust, and you can walk in and talk to people about what's going on. But within that app, they can set up that automatic pull, that automatic every time I get paid, so much goes into my savings, and then do two savings accounts, right? Kids have a wanderlust now that more than ever before because I see it on TV all the time. So have one savings account, one travel account, and then your regular operational account, right?
Yeah. Uh,
You have to remember, and the hardest part that I ever learned was I'm my own CFO, right? It's up to
mhm.
me to run me,
Yeah.
Javier Sanchez, as a business because no one's doing that for me. I don't have a board telling me that you're spending too much money or you're spending incorrectly. It's up to me. So when that light bulb went out, I'm like, oh wow, I'm a CFO of myself, so I need to get it together, right?
I need
Yeah.
to get Javier to come sit next to me in some of these appointments.
I'd love to.
Yeah.
So it's funny. It's interesting. It's interesting you say that. One of the ways we work with some of our business owner clients is we talk about the fact that we act as a personal CFO. We ask those thought-provoking questions. We help them build net worth statements and balance sheets to look at their cash flow. We talk or to look at their assets and liabilities. We talk about becoming spending aware, know what's coming in and know what's going out. We talk about automating savings. We talk about, man, I remember my dad teaching me growing up the importance of credit. This is one of those lessons that I remember. He said, "Son, you always want to have a good credit score. You always want to have access to money, but don't ever use it unless you need it."
Right.
Even to this day, I could probably get my hands on a lot of money right now if I needed to from the banks,
Right.
really quickly. Um, but I do not like carrying any amount of debt. So it's interesting. You have it, but you don't use it, but you got it in case, because no bank wants to loan you money if you got bad credit,
Correct.
right?
Right.
And he also told me, this kind of ties it up to what you said earlier. He would say, "Son, if you make $5, save, spend three, save two,
Yep.
save, spend three, save two." This idea of savings. Um, Xavier, you have any thoughts you want to add before we wrap this up?
The one piece that I got out of this, look at empowering our kids, giving them the opportunity to become financial or literate. Because financial literacy early is going to help to build the foundation for everything that they do in their lifetime when it comes to money management and money management skills. So we want to begin educating children as soon as possible.
Javier, any parting words before we wrap up?
No, when we're sending off our kids to college, tell them there's a lot of ways so that they can get their a bang for their buck for not a lot of money. Make sure that they have a library card to wherever parish they're going to be residing in, because the library has free resources for them that they want to use. Free video streaming,
Yep.
free tutoring, free audiobooks. So that way they can lessen their expenses as a college student. So I always say that. And
Yeah.
always read a couple of great books, right, on self-development.
Yeah. Yeah. You are the best investment you can make is in your own skill set
Yes,
that will
sir.
convert to the most money. So let me wrap this up. Let me see if I can succinctly pull together the practical things that you said. So first of all, the piggy bank is not dead. Secondly, if we want our kids, no matter how old, to become financially literate, we have to make sure that they have money to work with to learn how to manage money. That is a skill like riding a bike or swimming, and they need to have it in their hands to be able to learn how to use it effectively. Third, get a bank account. Even though the piggy bank is not dead, digital money is alive and well, and it's not going anywhere. So get a bank account in your kid's name and prompt them to regularly look at it so they can become aware of how much money they have in their account, and they're aware of what's coming in, and they're aware of how they're spending it. Um, Talk to them regularly, communicate to them regularly, and most important, whatever skill you want to teach your kid, make sure that you are a good example of that skill. So learn the skill if you don't know it before you try to teach them, because kids will do what we do more than what we tell them to do. Javier, thank you for joining us on the Stuff About Money. We appreciate you, man.
My pleasure. Thank you for having me.
I look forward to presenting with you here soon again.
Yes, sir. Thanks so much, guys. Have a great
All
day.
right, take care.